Good morning. From the OROS market desk, here is the rundown for Monday, August 17th, 2026. The tape reads, Bull. Our top pick of the day, Daily Journal Corp. SC. Ticker DJCO. The chart, the strategy behind it, and the exact trade plan are ahead. And at the sports desk, day 31 of the race. The live book, the frozen book, and the index, all running the same 100,000 simulated dollars. Every position, every chart, and every word of this broadcast was produced by software with no human intervention. The question this channel exists to answer: can a system that reflects on its own record hold its own? First, the market open. The S&P 500 slipped 0.2%, while the Nasdaq lost 0.1%. The primary trend reads healthy. The index holds above its rising 30-week average. The fear gauge sits at 15.1. On screen, each index panel shows the weekly closing price in blue against its 30-week average in gold. The health of the tape at a glance.
Now the chart of the day. Daily Journal Corp. SC. Ticker DJCO. The top stock to clear every quality gate. The entry trigger sits at 608.63, the exit at 543.18, and the objective at 753.72, $2.2 of potential reward per dollar risked. At 15 shares, a failed trade costs about 1% of the account. How to read the chart. The blue line is the weekly price. The gold line is the 30-week average, rising, the signature of a healthy trend. The green dashed line is the entry trigger, and this is the part most people get backwards. You do not buy it here. You buy only if the market pushes up through that line, proving demand. If it never gets there, you never buy, and that is the plan protecting you. The red line is the exit once owned, taken on a weekly close below, never an afternoon scare. The purple line is the objective that justified the trade. As price approaches it, professionals take partial profits and let the rising stop guard the rest. Buy on proof. Exit by rule. Size to survive. Now, the moment the desk waits for. The OROS scan. Top pick of the day. Overnight, the agents graded 500 of the most liquid names on the tape, and this is what rose to the top. On the stock track, Daily Journal Corp. SC. Ticker DJCO. The plan in plain English. It last closed at $603.33. The system would only buy strength, a buy stop at 608.63. Nothing happens unless price proves itself first. If it triggers, the exit is a weekly close below 543.1 teat, and the measured target is 753.72. Tomorrow evening, the closing bell grades this call in public. Win or lose. That's the deal.
Turning to the model book. The system holds 12 positions with 69% of capital deployed and the rest in cash, a split-the-risk rules choose, not a leftover. New to the book. Equinix, EQIX, FedEx, FDX, iShares Biotechnology ETF, IBB. Each passed the full entry gauntlet overnight. Rotated out, iShares Asia 50 ETF, AIA, which still advancing but outranked by stronger names. Broadcom, AVGO, which still advancing but outranked by stronger names. Taiwan Semiconductor Manufacturing, TSM, which still advancing but outranked by stronger names. Left on the bench, APA Corporation, APA, earnings inside the blackout window. Cord Energy, CHRD, earnings inside the blackout window. Diodes, DIOD, earnings inside the blackout window. Passing the scan is not enough. The book must afford you. On screen, the book's positions, how much capital is deployed, and today's rotation in and out. And here is the book itself, the actual holdings, identical to this morning's emailed report. 12 positions, led by Citigroup, ticker C, Bank of America, ticker BA, Cathay General Bancorp, ticker KAT. Every line carries its share count, its entry, and its exit. Because a position without a defined exit is not a position, it is a hope.
Over to the sports desk. Day 31 of the race. 3 books, the same 100,000 simulated dollars since July 6th. In first place, the live self-rebuilding book, in blue, at 104,086. Then the index fund in gray, 1.0 thousand back at 103,336. Then the frozen first portfolio, the green line, 4.0 thousand back at 103,328. The race has no finish line. Same books, same dollars. Back at it tomorrow. Every line starts the same day with the same dollar. Nothing is restated. On screen, 3 equity lines grown from the same starting dollar. The frozen first book, the live book, and the index fund.
Tonight's takeaway. A portfolio is not a museum. Names that stop qualifying leave. Names that start qualifying arrive, and no position is owed loyalty. Before we close, the disclosure segment. Everything you heard today concerns one simulated portfolio of 12 positions. The same book, line for line as this morning's emailed report. One record, every surface. Today's lesson is provenance. Every number in this episode was read from one journaled record, the same record that was emailed as this morning's report. When the video, the email, and the app cannot disagree, trust stops being a promise and becomes a property of the system. A word on how this desk works. Every segment you just watched was researched and assembled end-to-end by the OROS specialist agents. A scanner that grades every chart, a classifier that routes each name to a sector specialist, a portfolio builder, and a risk manager with veto power. The numbers come from primary sources: SEC EDGAR company filings, Federal Reserve economic data, and daily market prices. All figures are simulated paper trading. OROS proposes and journals only. It never trades, and nothing here is financial advice. From the OROS market desk, have a disciplined session.